Okay. Let's see. Hello, everyone. Good afternoon. So, if you are just joining in, please. I'm not sure why this stuff is echoing. Hi, please, if you can hear me and you are just joining in, kindly tell us your name and your location. Okay, so I can see Aaron Ibrahim, Hawa. Okay, so others, we are waiting for you. If you are just joining in, just tell us your name. Just tell us your name and your location and your startup name if you have a startup. I think it's also a platform for you guys to get networking ahead of our incubator program starting soon. Okay, we have Tita projects. Okay, Tisan. Okay, guys, good afternoon once again. My name is Pascal Ofodum, and I'm the program manager for Inspire Hub, Abuja Technology Village. So, for those of you guys just joining in for the first time, Inspire Hub is one of the leading incubation hubs here in Nigeria, Africa, and annually we train and graduate startups that join our portfolio. We focus on tech-enabled startups that are solving tangible problem. I think last year we graduated over 50 startups from our incubation program, and this year we are looking forward to um, graduate more than that sometime this year. And we discovered that one of the big challenges that a lot of startups face is how to access funding, right? There are different layers of startup funding, and at every point in your startup journey, there should be um, a kind of funding that you should be focusing on. You can't start a business and from day one you are chasing a VC fund. You are likely not going to get it because VCs have a checklist of what they consider before they invest in startups because they control institutional money. VCs invest with other people's money and they are very careful when they dish out their millions. So as a startup, you don't jump from day one, maybe without your product market fit, your founders market fit and you're jumping to VC funds, you are likely not going to get that. So we will discuss a couple of those elements here today. So without wasting much of our time, let me quickly display a couple of things that we would talk about today. Okay, let me put up my screen. Slides. Okay. Okay, why this is coming, why the slide screen is coming up, if you are just joining, once again, you are welcome. You can tell us your name, your startup name, and your location. So I've made like a quick points that that we would be looking at today. How to always win the startup funding game. We are waiting for more introduction. People just joining. Please um, tell us your name and where you are joining in from. So these are the highlights of some of the things we'll be looking at today. One, um, one things every startup ought to know before going to raise funds. Then the second one, how to prepare for external investment, preparing a winning pitch deck, building a network of investors. Then top funding opportunities to watch out for in 2024. So I'll quickly run through the slides. Then after that, we will open up the studio for questions. Meanwhile, if you have questions, you can send in your question through the comment section, please. So feel free to send in your question in the course of the presentation. So startup funding, it's a fact that a business is likely not going to go far without funding. First, you have to prove that your product is worth the investors' money, right? And this you have to do through achieving a product market fit, showing that there is really a market for your product and you have customers that want to purchase whatever product or service you are offering. If you don't have a market for your product, you don't have a business. I'm repeating it again. The mistake most founders do, that they focus so much on the technical aspect of the product. We are building with AI, we are building with Meta, we are building with all those big grammars, and we are building with machine learning and all of those things, forgetting that the core king of your business is the customers. Even if you build with AI or you build with another planet and the customers don't use the product or they don't understand how to use the product, you are building a business for yourself, not for the customers. So the first thing is to ensure that you are playing in large enough market to guarantee you make your profit and break even. So while you are doing that, you should have in mind the available funding options. And here are the funding options we have within the startup sphere. Number one is the founder's money. At the beginning of your business, you are likely to put in your cash apart from sweat equity that you invest in the business. You might put in your cash in order to prove your market, or in order to build a website, or in order to build the MVP that you will use to approach investors, maybe angel investors that will give you a bigger cash. So every business, if you don't invest your own money in your business, it is highly unlikely it is highly unlikely, quote me anywhere, it is highly unlikely that you will secure investors fund, especially VC funds, because it's all those small funds, your own fund, that you use to build your product up to the extent that an angel investor might get interested in giving you a higher amount of funds to build it to product market fit and to achieve the kind of traction you need in order to attract venture capital funds that will put in millions of dollars. So I'll give you an instant. I'll give you an example. So I discovered that I can produce a microchip that can make me that I can fix in a phone that will make anyone to, maybe you can use it to call up to 50 individuals at the same time. I'm giving an instance. I know this is way fast. So let's assume that you started this, you launched a startup. Now you need, let's say, um, let's say you need around 20,000 USD or even less for you to be able to prove that this chip would actually work. Now this round of first 20,000 or first 5K that you will invest in your business is likely to come from you, the founders. Two, grants. For those of us in Nigeria, grants that are well known in Nigeria include the Tony Elumelu Foundation grant, which is currently open now. Then there is also a Google Black Founders grant. They offer it to companies between pre-seed and Series A, and that, I think, it's up to 150K dollars in funding. So my point is, before you approach even angel investors or VCs, you will need contribution from yourselves, the founder, to build your product to a certain extent where it will be convincing for your family and friends to drop in some money, either as a donation to you or as investment. So for instance, you start a business and you have a rich uncle. Your uncle might decide to give you a donation of 5K dollars or 50K dollars just to support your business. Another uncle might be interested in the idea and offer to give you 100K USD in exchange for S amount of equity. That is an investment. So your family and friends might even be one of the first investors in your business. So if they are not getting in money as a donation to support your business, that means they are getting in money as investors. Hope I'm making things clear. If you have any question, please feel free to type in your question in the comment section, and I will address it as we go. So I'm just trying to make clear the funding rounds. Number one is founders funds, which should be contributed by you and your co-founders or your team. depending on how you structure it. Then the second level is family and friends. You've built your product to a certain extent, maybe a website, and you are acquiring a little customer and all of those things. And your family or friends, you approached them for funding and they agree to support. Some might make it as a donation to your business, while others might ask for equity because they believe in your business. Then from the money you get through founders and family and friends rounds, that's what you will use to build your business to the extent where angel investors will get interested in your business. You could also have access to grant. These days there are lots and lots and lots of grants for founders. You just need to search. As we speak, the Tony Elumelu Foundation fund for 5K USD is still open till 1st March. So if you are yet to apply for that, you can go check it out. So it's this first level of funding, founders, family and friends and grants, that you will use to build a tangible product to approach an angel investor that will give you a higher amount of funding, let's say 100K USD or 250. And from what you've achieved with angel investors money, that's it will determine if you move to the next level, which is the VC funding. And VC fundings are normally from maybe 500K depending on the VC. Some VCs invest as high as 20M, 50M and thereabout. So but the important thing is to note that all these smaller fundings, no matter how small, even if for example the Tony Elumelu fund is like 5K USD, invest it somewhere in your business where you will see the impact, so that even if an investor, whether an angel investor or VC, approaches you and asks how your finances are, you have a proof what you've done with all the fundings you've received. It's very important. Then that's about the funding options. Now when you come to funding, there is either equity or debt, and there is donation. So equity is when I'm giving in money to have a share of your business, maybe 5% or 2% or thereabout. Debts are like loans. Maybe you approach a bank or even friends or any fintech, you take a loan, but you need to pay interest. So it is a fact that equity is more expensive than debt, but as a startup, it's unlikely that you have money to be paying interest on debt and all, because you need to mop up as much money as you need to keep investing in your business. So that's why most startups go for equity, so that they have enough money to keep building and they won't be under the pressure of paying interest every month and all, just to meet up with whatever debt. So that's why most startup go for equity. But if you have the opportunity, or if you have the option to choose between equity and debt, debt I think is much better, so that you preserve your equity to when you really need to give out your equity in order to get funding. This is very important. It's a mistake most startups make. You start giving out equity as at the very first level of your business, and before you know it, you've given out more than enough equity that you start struggling with investors on the ownership of your business and the likes. Please put this in mind while you are giving out equity or when you have option to raise money. I've talked about grants, then crowdfunding. If you have the opportunity to crowdfund, you can do that. It's much more preferable too, compared to equity and some other funding rounds. Now, the next thing you need to consider before thinking about fundraising is, do you really need external funding? We've had startups that raise a lot of money and yet their startup go deep down. right? So you need to decide, do you really need external funding before you go looking for funds? It has to be a need. It's not a want. You don't look at other startups that they are raising $5 million and blah blah blah, and you jump into chasing after funds. You have to decide and confirm that your business actually needs this funding to be able to move to the next level. Now you need to understand your business model before seeking for any funding. Investors like VCs are coming into your business, are coming to invest in your startup because they are in it for the business, and if you don't have a way of generating funds, it's unlikely they will drop in money. So before you approach investors or you start looking for funding, make sure your business model is sorted out. How you want to make money from your business, whether you want to do subscription or freemium, or you want to sell products or unit economics, all of those things. You have to sort that out before approaching investors. Then you need to know your numbers. Are your financials intact? This is very important if you are approaching angel investors and VCs too. They would like to see how you've managed your finances, how you've managed all the money that have gone through the business, and all of those things. Your finances, your projection, and all of those things has to be intact. You should also be ready for due diligence. You don't go tell an investor that your business is legally registered, whereas it's not. Because before any investment flows in, investors will do their due diligence, which includes both financial due diligence, legal due diligence, everything. They have to check your books. They have to check whether you are using another startup's IP and all of those things. They have to do their due diligence to make sure that you are worth the money that they are investing into your business. You need to also know your funding needs. I've mentioned a little about that. Do you really need funding? And then how much of funding do you actually need? You need to go for funding you need so that you don't give out your equity excessively at the beginning stage of your business, because whether you like it or not, you will still fundraise in the future. So it's better to get funding based on what you need. Then know your investor audience. Every venture capital firm have a thesis for their investment. And when I mention this, I mean every investment fund have verticals they are focused on. Every VC firm, for instance, might have a thesis that says they will be focusing on edtech or fintech or clean tech. No amount of pressure, even if you are their aunty or their uncle. It is a wholly set up fund, and they give account to their institutional investors. So you don't be in maybe your startup is in agri-tech and the investor you are approaching doesn't invest in agri-tech. That's why you need to do a good research about their investors you are approaching before you approach them. Investors have verticals they invest in. You check through their thesis, you check the history of founders they've invested in and their success rate. Those are the things you should consider before even approaching the investor, so that you determine whether those investors are good fit for your business. Then be realistic about your valuation. If you overvalue your business, you are likely to chase out investors. And if you undervalue your business, you will be the one that will lose much equity at the end of the business. So while you are doing all of these things, try as much as you can to get the necessary expert. For example, in terms of valuation, you might want to maybe hire a lawyer who is knowledgeable in that area, or a VC expert to sit on your board. Then you need to build relationships. You don't start approaching investors the moment you need funding. You start ahead of time to start building relationship with these investors way before you start um searching for funds. Then have a strong pitch deck. I will talk about pitch deck in a moment. So your pitch deck has to be clear as to the value you are offering to the investor and the traction you've gained in the market, who your team is, and all of those things. Let's move on. So how to prepare for external investment? You have to create a clear and concise pitch deck. You have to seek investors who are good fit. I've mentioned that earlier. You make sure that the investors you are approaching are the right fit. If you need investors that will not just drop in money, but they will contribute their network in opening the market for you, and they will mentor you because they've probably been in the field. In fact, it's advisable to go to investors who are likely in your industry so that it's easier for them to open doors for you to expand your market. If I'm an investor and I function within finance or crypto, it's easier for me to introduce you to someone within the sector who can help you maybe approve something that you've been looking for versus getting someone in a Greek to come and help you sort out something that is not within their field. I hope I'm making sense. So when seeking for investors, you have to make sure that you have a checklist of what you are looking forward to get from them. It's beyond money. If you have all the money you have and you don't have the right network to open doors for you, and you don't get the right mentorship to tell you what should and what should not be done in an industry, your business is likely to face serious challenges. The third one, start creating a great network of investors ahead. I've mentioned that achieve product market fit if possible before going for investment. I've mentioned that. So let me quickly rush through so that we entertain your questions. Now, how to build a network of startup investors. Attend investor startup mixers. So a lot of startup shy away from meeting up people because you build from remote location and all of those things. Fine, we understand that maybe those in tech, those that code, the CTOs and all, they are more of remote people. But if you are the CTO and you are also the CEO, I will advise that you have a co-founder who is more outgoing. Let me repeat it again. If you are the CTO, it's likely you are doing most of the coding, and which might likely keep you indoors. So it's advisable to have a CEO or a CMO who is outgoing and who would help you in some of the outings, right? It's likely that, in fact, investors are most likely going to ask to see the CEO. So it's either you develop that attitude or that habit of going out. You have to build yourself, your interpersonal interaction and all of those things. It's either you develop it, and aside from that, you still need a team member that you prepare for such occasion in case you are not able to, because there will be situations where you might need to go for 2 or 3 events where you need to pitch at the same time and you can't be all there. So ahead of time, train some of your team members to be ready so that they attend where you cannot attend. Then the second one, attend relevant events and programs for startups. Now there are events, Africa Tech Festival, Africa FinTech, blah blah blah. I think there is an event holding in Nairobi next week, and it's around start. I think Africa Startup Festival or something like that. So there are a lot of, and there is one that held this week too, around innovation. So these are places you go to meet investors, because investors attend these events to come and search for the top startups they are likely to invest in. So investors are coming to seek out startups, while you as a startup, you are coming to not just pitch but search for investors that are good fits for your business. So it's very important that you seek out some of these events to attend yourself. Then join incubator and accelerator programs. There are a lot of accelerator programs these days. You have YC, you have the Techstars, and we also have our own incubation program here, Inspire Ideate, which we have like 3 or 4 cohorts every year. So you should be on the lookout. If you've not joined our social media or you don't follow us, you can follow us at Inspire ATV if you need to attend an incubation program. So this is where you get to meet other startups too that are building like you, and you get to pitch to investors in case there is a demo day for such incubation program. Then the fourth point, you need to start creating and sharing valuable content. You can talk about your business, your startup journey, maybe lessons you've learned from an event you attended. Just start putting yourself out there as a startup. Be active on social media. You have to intentionally connect with investors on LinkedIn especially. You have to intentionally connect with investors. Then seek out warm introduction. Warm introduction works very well. In fact, more than investors going to search for startups. If an investor invests in a startup that has done $1 billion in sales, it's very likely that any startup that is introduced by such founder would be taken in high regards by that investor. So seek out your colleagues who are already doing well in business and they've raised funding for them to help you with warm introduction. Utilize online platforms like AngelList, Crunchbase to connect with investors. Now we are in pitch deck. So this is just a summary of what a pitch deck should contain. One, problem statement. So it's an experience we had during our last ideation program, where a lot of startups, they've not even prepared a pitch deck. Some of them that have prepared a pitch deck, they say their pitch deck is private. Now you have to, whatever pitch deck you are preparing, pitch deck is meant for public consumption. It has to be ready. So if an investor requests for a pitch deck, so whatever information you are putting in pitch deck that is not supposed to be there, just leave it out. Let me repeat it again. Pitch decks are meant for consumption. And there is even a habit that some startups do. They tell you, before they tell you about their business or their pitch deck, you will sign an NDA. NDA means non-disclosure agreement. Nobody has that nonsense time. It's either you are bringing your pitch deck for investors to look out, or you are keeping it. Nobody has time for nonsense NDA. If your business is that good and you think you are building the moon on earth, then you should go and raise the funding yourself. No investor, some startups do that, and it pisses investors a lot. So if your business is is creating another planet, and you don't want an investor to steal that idea from you, please go and raise the money from for yourself, because investors are very, very unlikely to sign any NDA just to look at your business idea or pitch deck. Nobody has that time. So if you know what you have to do to make sure that anybody can look at your pitch deck, there are stages when you start bringing up NDA, but not for you to tell an investor your idea. You are asking for an NDA. Come on, it doesn't work that way. So quickly, let's go through the elements of a pitch deck. Your pitch deck has to explain the problem you are solving. For instance, you might start with in Africa, 70% of people are unbanked and blah, 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 doesn't have access to mobile phone, and your business is coming in as a solution to connect people in the village to finance and blah, 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 blah. It's that simple. You have to start with the problem, if possible. In fact, add statistics and story to it. For instance, you live in the village and you don't have access to finance, to payment and all. You won a scholarship that is worth blah blah blah, but for you to pay, you needed to upload your application form and blah 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 blah, and you lost that scholarship due to this. And that's why you are building this solution to solve the problem. Now you are bringing in your personal story. When it comes to health, I had a pitch deck, was it 2 days ago or thereabout, where a startup that is in health, I think check out or thereabout, he started a health tech, a health tech business, because his mom suffered, I think stroke or something, that she was not able to access health opportunity, because you go to healthcare centers and you have to queue and all of those things, right? So he weaved in his personal story into it, and it led to the problem that the market was facing and how his solution is helping to solve that. You can order for your test right from home. You don't need to go to hospital for you to run tests. You go through the app, you request for a test, they come take in your sample, do your test and return it to you. Simple. So try as much as you can to weave in storytelling in your pitch deck and position yourself as a solution. And the fact that it's a big market that is worth the investor's money, and the investor would see the ROI. Competitor analysis, you have to kind of have a table or place yourself side by side with the competitors in the market to prove that you are the most preferred option. Then if you have traction, definitely if you are approaching VCs will want to see traction, and traction includes sales you've made, number of downloads if it's an app, number of sign-ups if it's a website or wherever. They want to see traction. Then team, there has to be founders market fit. If you are operating in a health industry and you as the founder is not a health person, no member of your team is a health person, you didn't even hire outside people in health to become a part of your team, sorry, your pitch deck has a lot to do. So we advise, if you as the founder is not a health person, for instance, hire team members that are within that sector, or get a board advisor. Just getting team members that shows that your business has founders market fit, because you can't be operating in a sector that you know nothing about. Then you have to state the ask. You are asking for 100K USD. You have to state the ask. You are asking for this amount of money, for so amount of equity, and this is what you will use it to do. It should be on your pitch deck. Now, these are top funding opportunities for you guys to be on the lookout. You can take a screenshot of these. So the Tony Elumelu Foundation grant, it opens every 1st January till March 1st. The Black Founders Fund, you can Google it up. They give up to 150K USD. Mest Africa Challenge, they offer up to 50K USD. Anzisha Prize, up to 50K in support. Seed Star Challenge, up to 2 million USD. Sorry, let me take water. So you have Seed Star Challenge, up to 2 million US dollars, then Acumen Fund. So you guys can snap the screen or write them down and Google them up later so that you follow up to know how to apply and all of those things. I'm almost coming to the end of this session, so if you have questions, please send in your questions. Okay, so some helpful tips when applying for funding. One, don't approach VCs until you have a product with reasonable traction. This is what most startups don't understand. VCs are in it for the business. VCs invest with other people's money. They get money from pensions, insurance, and other institutional funds. So they have to account for every penny that they invest. So that's why they are very, very strict when scrutinizing startups they invest in. So make sure to attain some level of traction and product market fit before approaching VCs. Secondly, utilize founders, family and friends, grants and angel funding to attain product market fit before approaching VCs. Founders market fit is as important as product market fit. I've mentioned about founders market fit. If you are not a founder within the industry you're operating in, make sure you hire team members from that industry. Start connecting with investors even before you need them. This is very important. Start creating a network of investors, start attending events where you get to meet investors and all of those things. Then some recommended resources, customer funded business, you can check it out. Then mom tests, you can check that out too. So guys, thank you, thank you, thank you. So questions, it's time for questions. Please, if you are still here, drop an emoji so that I'm sure that I'm not talking to myself. If you are still in the room, please drop an emoji. Hello, if you can hear me, please indicate. So I'm waiting for questions. If you have questions, please drop in your questions. Else, we round up the session now. Okay, so I'll give 1 extra minute for questions. If you have any questions, please drop your questions. If not, we round up this session right now. I think I see some people are still joining. Okay, so since we are not getting any question, I just hope that um, it's not a network problem. So while we're waiting for you to type in your questions, but if you have any questions and you're not able to send them here, you can send me a DM on WhatsApp, or you can send a DM to the Inspire Community Manager on the startup group, or you can send us DM on Instagram. I will type in the Instagram handle at Inspire ATV. You can send in your questions. Okay, so since there are no questions, we'll come to the end of this session. Thank you to everyone who made our time to attend this session. So if you have any questions, you can reach out to us and we will address it. In the meantime, you can follow us on Instagram and join our WhatsApp group where we you have access to startup opportunities like this as soon as they open and start accepting startups to give grants and other opportunities we share on the page. Our incubation program will be open in this first quarter of the year, so you can look out for that too. So once again, thank you everyone for making our time to attend this, and we wish you um, a very splendid weekend. Thank you.